at 12:30 p.m. only on BloombergQuint.
Good morning and thanks for tuning in. You're watching All You Need to Know on BloombergQuint Live and I'm Alex Matthew. First, the headlines. The World Health Organization declared a health emergency for the coronavirus outbreak. The death toll from the disease has now risen to 213. The budget session of Parliament begins today with the President's address. Finance Minister Nirmala Sitharaman will table the economic survey in Parliament at noon. Private sector lender Kotak Mahindra Bank reaches an agreement with the Reserve Bank of India, settling long-standing differences between the bank and the regulator over promoter shareholding. Tata Motors reported a net profit after a record loss last year. Margins see an expansion aided by various cost-cutting measures. And State Bank of India, Hindustan Unilever, ITC, Vedanta, Kotak Mahindra and Power Grid are the major Nifty companies that will be reporting their third quarter earnings today. Now, before we get to earnings, there's still lots to talk about. Let's talk about the US markets first. They rebounded in the final hour of trade on Thursday. Benchmark indices traded most of the day with losses before a surge in the final few minutes. That was after the WHO announced a health emergency but said there was no need for stringent restrictions on trade and travel just yet. We're going to tell you about that, but first, here's Abigail Doolittle of Bloomberg News with what happened during that Wall Street session.
Risk assets staged a bullish reversal or recovery in Thursday's Wall Street session. This after the World Health Organization's assessment of the coronavirus, while declaring it an emergency, not as bad of an assessment as some traders and investors had feared. So early in the day, stocks had been down sharply, down as much as 1%. But at the end of the day, in Thursday's Wall Street session, the three major averages all climbed. The S&P 500 up about 0.3%. That was true, too, for the tech-heavy NASDAQ, and the Dow led the way up more than 0.4%. Now, commodities, that's another area of risk assets. Those commodities, many commodities paired their losses, including copper and oil, but both copper and oil did finish down lower. Copper down for a record 11th or 12th session in a row, depending whether or not you include the Martin Luther King Day, and down in a correction over that time period. Copper is one of the natural resources used by China. Many of the factories there closed, so some concerned that copper demand will drop in the near term, therefore down. A divergence between commodities and stocks is worth wondering or thinking about, only because, again, this S&P 500 up about 0.3%. Overall, the Bloomberg Commodity Index down 1%. So there are still worries, macro worries around the coronavirus and what that could mean for the global economic growth. But again, on Thursday, at the end of the day, the bulls prevailed. This was confirmed by Haven Bonds selling off. Earlier in the day, Haven Bonds had been higher, but at the end of the day, with stocks higher, bonds were lower. As for individual movers, Tesla up more than 10%, surging on a blowout quarter, an all-time high there. Microsoft also posting an all-time high, up nearly 3% on a very strong quarter on cloud growth. To the downside, though, we did see Facebook down more than 6%. They beat estimates, met estimates, but investors are concerned by slowing growth. UPS also dropped on the session, down more than 6%. The 2020 profit outlook a little bit disappointing. Now, in the after-hour post-market trading action, we do have Amazon surging up more than 10%, putting up an all-time, or they could put up an all-time high if these gains hold in Friday's Wall Street session. The holiday results really crushing estimates. But to the downside, Amgen, the biotech maker, those shares lower on a disappointing fourth quarter sales fell. Net-net, at the beginning of Thursday's Wall Street session, it was a risk-off tone. At the end of the session, it was modestly risk-on, with stocks slightly higher and bonds lower, investors looking past, to some degree, the coronavirus fears. In New York, Abigail Doolittle, Bloomberg News.
All right, let's take you through that headline now. The World Health Organization has declared a public emergency, that is a public health emergency. The virus has also reported its first confirmed cases in India and the Philippines. Let's first listen to the Director General of the WHO.
I'm declaring a public health emergency of international concern over the global outbreak of novel coronavirus. The main reason for this declaration is not because of what is happening in China, but because of what is happening in other countries. Our greatest concern is the potential for the virus to spread to countries with weaker health systems.
All right. Well, that's a brief bite, of course. He said a lot more than that. In fact, let's go across to Rosalind Chin, who's been tracking the developments from Hong Kong. Ros, I think you've listened to the entire, address that he made. What did he say about the global efforts to halt the spread of the disease?
Well, he did say that to China. He gave particular praise to China for its efforts to contain the spread of this disease. China, of course, believed to be where the disease started in the first place, in the city of Wuhan in Hubei province. And he did say that, let us be clear, this is a note of confidence, not a note of no confidence in China. And he praised the efforts to contain the disease in China. Around the world, of course, he did say that there's no need to change trade or travel advisories because of this spread of coronavirus. However, of course, we do know that airlines and governments have already issued advisories about this. So his advice coming there a little bit too late in some cases. And he did also say, though, to be careful of rumors. He said this is a time for facts, not fear, for science, not rumor, for solidarity, not stigma. And he did ask people, because of course there is a lot of fake news going around, a lot of rumors, a lot of things stoking fear in people. And he urged people to rely on facts, not to listen to just the rumor around them. And I have to say that, even in places like Hong Kong, here you see on the streets many people, I would say at least 80 to 90% of people I encounter walking around in the streets are wearing masks just in case they encounter other people who may be ill. Also, there is a run on things like antibacterial hand gel and antiseptics and alcohol cleaners, just because people are very afraid of the disease and they do want to keep themselves clean. Hygiene being a key issue, a key way of keeping yourself, preventing this disease from coming in. Now, we also have experts trying to understand a little bit more about this virus, understanding how it's transmitted, understanding how long it takes for it to be transmitted to someone else, and also how long you may incubate it for before you show any symptoms yourself. These are among the issues that experts around the world are trying to look into right now.
Rosalind, in the interest of sticking to the facts, what are the latest numbers, the official numbers about the spread of the disease?
As far as we know, there are over 9,800 cases around the world globally, and that's across more than 18 nations. Now, most of those, of course, do come from China, which is where they believe that this coronavirus did originate. And China has now said that there are more than 9,600 cases. That's up from 7,700 cases yesterday, around this time yesterday. And the number of deaths in China now at 213. All those, the deaths from this coronavirus have actually been in China. And there have also been a number of suspected cases or that actually have not turned out to be coronavirus at all, because, of course, authorities are being very vigilant and maintaining the highest levels of alertness about this illness. So, of course, there are tests being done on people who then turn out not to have coronavirus after all. Now, in the US, of course, we saw that health officials did confirm the first 2 cases of human-to-human transmission. There was a lady in Chicago who had been to China, and she then infected her husband. As you mentioned, India and Philippines confirming their first cases as well. Russia closing its borders, land borders with China to travelers as well. So governments around the world are taking measures to prevent this illness from spreading. However, it does look like although the symptoms may be milder than some of the diseases it's been compared to, like SARS or Ebola, it is a very virulent disease that does seem to spread very easily, and that is a cause for concern. Back to you.
Thanks so much for those updates, Rosalind. Thanks so much for joining us this morning. Now, let's go across to Sue Keenan of Bloomberg News, who brings us the first word headlines. That's the headlines from across the globe.
We're going to start with the world's leading oil producers. They are debating whether to bring forward their next meeting amid signs the virus outbreak will hurt demand. OPEC is next due to meet in March, but reports from Algeria say the gathering may move up to next month as producers assess the likely impact on demand for energy. Now, one delegate said the idea is at an informal stage, but several others said they were unaware of plans to bring forward the meeting. The U.S. economy, meanwhile, is holding steady. That's despite drops in major confidence indicators. The economy grew an annualized 2.1% in the fourth quarter. That marginally outpaced estimates, and that's the same as the previous period. But there were declines in consumer spending, and business investment deteriorated. The White House economic advisor, Larry Kudlow, says the U.S. has not seen any major economic impact from the coronavirus. To Japan now, where industrial production recovered in December after falling for the 2 previous months. Factory output climbed 1.3% from November, almost twice what economists had expected. Even so, production slipped 4% over the December quarter. Now, separate data shows Tokyo consumer prices rose by 0.7 this month. That's fractionally below forecasts. And to the U.S., President Trump's impeachment defense has undergone a dramatic transformation on Capitol Hill. It's gone from saying his call with the leader of Ukraine was perfect to saying it wasn't criminal to now claiming it was permissible if inspired by mixed motives, to finally asserting that seeking foreign help to win re-election is not impeachable. Former National Security Advisor John Bolton is still waiting to hear from the White House amid reports the administration wants to block his upcoming book. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Sue Keenan. This is Bloomberg.
All right, let's turn to trade in India now. Agam Vakil is joining me to tell you all about that and also to tell you what's happening in the futures and options space. It's going to be a very busy day, Agam, in terms of Nifty earnings, a lot of them being announced today, and also you'll have the economic survey being tabled in Parliament.
Yeah, from the earnings, the majority of them are mine, so it's certainly going to be a busy one for me.
Good morning, by the way.
Thank you. Good morning to you. Well, let's start by taking a look at how things were shaped up yesterday. Well, for now, the SGX Nifty is indicating an up move, but when it comes to markets yesterday, where there was a lot of volatility, we saw a lot of weakness in the Nifty as well as the broader markets. There was in fact a lot of selling pressure across. It was indicative in the banking indices too, with the Nifty banking index also down by around 0.7%. But let's move on and talk about your ADRs. For now, we're looking at some amount of weakness for Tata Motors, HDFC Bank, ICICI Bank, etc. And well, it's the same for Wipros and Dr. Reddy's. How were fund flows yesterday? Well, we saw further selling from FIIs, and now this brings the selling over the last 4 days to well over $400 million from the FII stable. DIs, on the other hand, really didn't come in and plow in any funds at all in the Indian equity markets yesterday. But we did see weakness in Reliance Industries, HDFC Bank, and Infosys weighing down on the indices. But what about futures and options? This is around the time where we did see a lot of traders withdraw. And even though we are looking at expiry, and that was the reason why we're looking at an increase in open interest for the Nifty futures, the rollovers have not been very strong for this particular expiry, considering we have a bunch of events lined up. It's the same for the Nifty Bank, of course, but 71% increase in the February open interest. And moving on to your open interest distribution, this is, of course, the 27th February one. So we're still waiting for the range to develop, but for now it's a 500-point range between 12,000 and 12,500, and we do have a lot more writing around 12,100 and 12,200 calls. Let's move on and talk about your India VIX. That's up around 1.8% at around 16.8, and the Nifty put call ratio is at around 1.2 against 1.1. We also, in terms of stocks, have a lot of traction in Tata Power, United Breweries, and Aurobindo. Of course, this is on account of the fact that we are looking into a new expiry, so we'll be watching out for some of these names. But let's wait and watch, Alex. A lot of guess is that we may not see as much traction today, considering a lot of positions have already unwound yesterday. And in the run-up to the budget, we're going to have to wait and watch, considering markets are open tomorrow. Yes. There's possibly going to be a little more action tomorrow as compared to today.
Sure. Thanks so much for that, Agam. All right. Now, just when markets were closing yesterday, we got an important piece of information. Uday Kotak and the RBI have apparently finally buried the hatchet. The two sides have arrived at a new time frame for Kotak to reduce his stake gradually in the bank, while also capping his voting rights in the meanwhile. Ira Dugal has the details.
A long-standing dispute between Kotak Mahindra Bank and its regulator, the Reserve Bank of India, has come to a happy ending. Well, at least a happy ending for their Kotak. We'll tell you why we are saying that, but let's run you through the news which came through on Thursday. The bank informed stock exchanges that it has reached an in-principle agreement with the RBI on the issue of promoter shareholding and promoter voting rights. And after reaching that agreement, it has withdrawn a case it had filed in the Bombay High Court, questioning the RBI's diktat that the promoter needed to bring down shareholding to 15% within a stipulated time period. What will happen now is this, and this is what has been agreed upon between the two parties. The promoter will bring down his shareholding to 26% within 6 months of the RBI approval. This is an in-principle approval. The final approval will come shortly, I presume, and within 6 months of that, he will bring down his shareholding to 26% from the current 29.9%. Now, the stake reduction there of under 4% is far easier to manage than a 30% to 15% stake reduction, which would have happened if the RBI had stuck to its guns, and that was a big weight on the bank and the bank's shares. So clearly that gets removed with this agreement. Now the question is that after 26%, what happens? Does he stay at 26%? No, he does need to bring it down to 15%, but over an unstipulated time period. So the agreement seems to suggest that promoters will not purchase any further paid up voting equity shares of the bank till the percentage of promoter shareholding reaches 15%. There is no time period stated for this. It essentially suggests that as the bank grows, either organically or through mergers and acquisitions, Uday Kotak would not subscribe to any new paid up voting equity shares, and eventually his shareholding could fall down to 15%. When is eventually? Well, that's been left open, and that is the big point of victory actually for Uday Kotak. We'll come to that in a minute, but there's also the issue of voting rights in a bank. Remember, the RBI regulates that as well, and it's currently by regulation capped at 26%. In this case, the RBI has asked them to cap it at 15% starting April of 2020. So essentially, the voting right cap is in line with the eventual shareholding. So the RBI is probably saying that, okay, our objective of not having undue control from the promoter group on a large bank has been achieved by capping the promoter voting rights at 15%, while Uday Kotak is probably saying that my economic interest is not being diluted in a hurry. So, I'm happy there as well. Yet, this is a big relief for him. There is no pressure for a large and immediate dilution, as we said. And also the capping of the voting rights, honestly, is not a huge deterrent to decision-making or control over decision-making in the bank. India is not a market where you have large and very vocal institutional investors. So you will see not just promoters with 15% shareholding running the bank pretty much the way they want to, even managements which have very little shareholding in a bank just via ESOPs continue to run the bank the way they want to, because institutional shareholders are not yet as vocal as they may be in some other markets. So, broadly, this is as good as it gets for their Kotak. Now, there was also the issue of what this suggests for the RBI's view on the broader debate about promoter ownership in banks. Remember, there have been two sides to the story. Those who argue that greater skin in the game works better, and those who say that no, one promoter group should not have control beyond a certain point, both in terms of voting rights and equity share capital in a bank. Well, the RBI, by insisting that Kotak bring down its holding to 15%, has sort of stuck to its guns. So to me, this is a reiteration of the publicly stated stance of the RBI. They could change that, and they actually allude to that in the in-principle agreement when they say that should the cap of 15% ownership be changed in future, Kotak would be allowed to raise his ownership to that particular level as well. But for now, they have reiterated their public stance. It does not, though, have major implications for other banks. For example, Bandhan Bank. The reason for that is that when Bandhan Bank was licensed and some of the small finance banks were licensed, their licensing conditions were very clear. So unlike Kotak, which argued that I was licensed under a certain regime and then the rules kept changing, the goalposts kept changing, and that's unfair to me, the other banks will not be able to argue that. So this has implications in the sense that it is a victory for Kotak. It will take away what could have been an ugly lawsuit between a bank and its regulator playing out in the Bombay High Court. But it does in some ways reiterate that the RBI has held on to its broader framework where it says that bank ownership has to be carefully monitored and promoters will not be given control beyond a certain point.
All right, watch out for Kotak Mahindra Bank in trade today. Somit Sarkar is joining me now to tell you all about the stocks in news. Somit, good morning. What are the stocks that are in the news today?
Good morning, Alex. I'll start off with the earnings. Firstly, Bharti Infratel, the results were largely in line with analyst estimates. The numbers were aided by higher exit charges and higher energy spreads in the third quarter of financial year 2020. But due to a higher tax rate in this quarter compared to last quarter, there's a 17% fall in the net profit, which is the highest in the last 12 quarters. The tenancy ratio also remains stable for Bharti Infratel at 1.85 times. Marico results were largely in line with estimates. Margins were aided by lower raw material cost, and gross margins were also higher because of that. The domestic volumes declined by 1%, but the company expects a demand recovery in the 6 months time period. Amber Enterprises revenues the revenues number were ahead of analyst estimates because they included numbers from Sidwal Refrigerations, the latest acquisition of the company. The margins expanded due to lower raw material costs, and the net profit was aided by a tax reversal in the third quarter. JK Tires and Industry revenues were down 19%, net profit declined by 59%, while the EBITDA declined by nearly 8% compared to last year. Bharat Electronics revenues were down 17%, EBITDA declined by 54%, net profit was lower by 57%, margins came in lower at 15.7% due to higher raw material cost. Turnover in respect of some major projects could not materialize, and that's the reason the company's revenues were down by nearly 17% compared to last year. Persistent Systems, the dollar revenues were up 3.1%. Indian revenue in terms of Indian currency was up 4.3%, while the net profit was higher by 2% compared to last quarter. EBIT increased by 1.9%, while margins came in stable at around 8.7%. Segment-wise, if you see, the technology service revenues was up 8%, while the Alliance service revenues was down 3% compared to last quarter. Equitas Holdings net interest income up 22%, net profit was higher by 47%, while the asset quality of the NBFC remained stable. And lastly, on the earnings side, MCX revenues were up 16%, net profit was higher by 32.4%, while EBITDA increased by 88%. A margin increase was due to lower other expenses, and average daily turnover in the commodity futures space was up 16%, which led the revenues higher for MCX. In other stocks to watch, firstly, Motherson Sumi System, they said that they are reorganizing their business to demerge the domestic wiring harness businesses, and the new company will have a mirror shareholding, that is 1:1 shares will be given to the existing shareholders of Motherson Sumi. PNC Infratech, because they have been the lowest bidder for an EPC contract in Haryana worth nearly 639 crore, which they had got earlier, now stands cancelled. And lastly, Wipro, because the CEO and MD Abidali Nimuchwala steps down due to family commitments. However, he'll be holding the office as a CEO and MD till the successor is appointed for the company.
All right, thanks so much for that, Amit. Now, on to the big updates with regard to earnings. Tata Motors' bottom line in the third quarter has taken the street by surprise. But a closer look at the numbers will show that it's not been an operationally strong quarter either. Forum Bhatt is here to take you through the details.
The company reported a weak set of numbers operationally this time around. However, it was profit which clearly stood out this quarter. Now, revenue declined 6.8% at about 71,676 crore rupees. EBITDA was up 20.68%, and margins stood at about 10.31% versus 7.96% a year ago. Now, profits were up this time around at 1,738 crore rupees versus a loss of 26,993 crore rupees a year ago. Now, remember, this quarter last year, the company had taken a one-time impact of impairment of JLR, which had impacted the profits of the company. And this time around, however, the profits improved on account of lower depreciation and lower raw material cost. Now, continued growth from JLR is what drove the overall growth for the company this time. Standalone numbers were, however, pretty disappointing this time around. Now, looking at JLR, the revenues were up 2.8% at 6,400 million pounds. EBITDA margin was up at 10.8% versus 7.3%, and PAT stood at 372 million pounds for the company. Now, China retail sales grew up about 24.3%, thereby increasing the revenue for the company. A strong product mix is what aided margins, and profits were up due to higher China volumes, stronger product mix, lower operating cost, and favorable foreign exchange. Now, looking at some of the con call updates as to what management had to say on the numbers. Now, it expects to deliver 3% EBIT in FY21 for JLR. Now, on the coronavirus coronavirus situation this time, the management commented that it would keep a close watch on its impact on the numbers, as it expects EBIT to have a negative impact of the situation going forward. Now, JLR is expected to incur a capex of about £3.6 billion for FY20 and up to £4 billion in FY21. It has also now launched the next phase of Project Charge Plus, which aims to deliver a further £1.1 billion in cost savings over the next 15 months to March 2021.
Now, the country's largest public sector bank will report its third quarter earnings today. While all eyes will continue to remain on the asset quality, SBI will get a cushion from the recent resolution of some large bad assets which were stuck at the NCLT. Shefali Malik is joining me to tell you all about the expectations. Shefali?
It's expected to be a very strong quarter for State Bank of India this time, primarily aided by recoveries from various accounts. So starting with the basic numbers, the net interest income is expected to jump by 6.4%. Its pre-provisioning operating profits is expected to jump by 38% on a YOY basis, and profit is expected to jump by 30% to 5,142 crores. Now, primarily SR Steel recoveries are going to aid their earnings this time around, and some of the other accounts such as Ruchi Soya, Prayagraj as well. So all that will come to reflect in their books this time. Slippages, however, are also expected to be high, mainly led by the DHFL account, which will be accounted for in this particular quarter. And apart from some of the lumpy slippages, we are also expecting a seasonal spike in some of the granular slippages. So that will also be reflected in the earnings. And the credit cost as well is expected to remain at elevated levels this time around. And some of the business metrics, loan growth expected to be around 10.5% on a YOY basis, primarily led by retail. Last time, State Bank of India chairman had told me that as the working capital utilization levels pick up, then there might be some amount of pickup that may come in corporate lending as well. So that remains to be seen whether that happens this time. But the loan growth overall is expected to be led by the retail book. Deposits growth also expected to be around 8% on a YOY basis, and margins are expected to remain almost flattish on a sequential basis. However, the repo-linked loans and the corporate book yield, which is expected to decline in this quarter, that is likely to weigh down on the margins. And we'll watch out for any amount of spike in the SMA 1 and 2 accounts for State Bank of India this time. So, but overall, expected to be a very strong set of earnings for SBI this time.
Now, Hindustan Unilever board meets today to review its third quarter earnings. It's also going to take up its parent Unilever's decision to review the global tea business. Agam Vakil is joining me now to tell you all about that. Agam, it's not looking too good with regard to consumption remaining subdued.
Certainly, we're not expecting a very good quarter from Hindustan Unilever. That is the largest FMCG company in India right now. Well, considering in terms of expectations, just a 5% uptick expected. We're seeing EBITDA margins coming in at around 22.3%, a little bit of an expansion with profits rising around 10.5%, but that will be largely on account of the tax breaks, coming in. Now, in terms of volumes growth, we're expecting 3 to 4%, and this will be at a multi-quarter low should it happen. Rural growth has decelerated further. We don't really have too much in terms of growth in urban markets either, and we are looking at slight improvement in liquidity in wholesale channels, but on the whole, things have not really improved when it comes to consumption as a whole, which is why we're not expecting a very strong quarter for Hindustan Unilever. And of course, concerns remain with respect to volumes growth, as already indicated by its parent a few weeks ago.
All right, thanks so much for that, Agam. Now, but ITC is also expected to be relatively more resilient to the demand slowdown. Analysts expect the company to perform better than its larger rival HUL. Agam, you're tracking this as well. What's being priced in?
Sure. So what we are looking at, Alex, right now is that a little bit of growth coming in the cigarettes business. And of course, that is a key driver, considering a good half of the revenues of ITC come from there. But in terms of, expectation, net sales are likely to rise around nearly 6%. EBITDA margins, again, expected to expand with around 38.8% by as much as nearly 100 basis points. Profits likely to rise about 21%. Now, cigarette volumes, they don't really report cigarette volumes, but we are taking in about 2 to 3% growth as far as the Bloomberg poll is concerned. We're expecting the FMCG business to look at a subdued 6% growth and sustain operational profitability, because that is something that it has become consistent in. Not too much to speak for otherwise when it comes to the agricultural and the paper business. Hotels business may very well do well in this particular quarter, considering the holiday season, and the entire sector has done well, but not expecting too much from ITC either.
Thanks so much for that, Agam. Now, Vedanta is likely to report a subdued third quarter performance impacted by a weakness in its oil and gas, copper and steel business. Nikki Mirchandani is here to take us through the street estimates.
Vedanta is likely to report subdued set of quarter. If you look at the top line performance, we're expecting a dip out there, 14.6% slip at a number of around 20,223 crore. Even in terms of the EBITDA performance, we're expecting a downtick there to a number of 4,775 crore, which indicates a slip of as much as 15%. Margins are expected to be flat in this quarter year-on-year basis, and also profitability. That number is expected to take a hit by more than 50%. If you look at the segmental performance of the company, essentially the losses are just expected to be there for the copper division as a whole on account of closure. Aluminium division, however, is expected to report some amount of decent set of numbers out there. Lower cost essentially is expected to aid the EBITDA performance for aluminium division. And iron ore, for that it's going to be the higher volume year-on-year basis, which is expected to lead an uptick out there. Zinc, Hindustan Zinc has already reported numbers which are fairly in line set of numbers, which have been impacted by low grades and high development costs. Oil and gas business for that matter, and also steel business, they're expected to be affected by stress and realization on account of lower pricing power that both of these commodities have witnessed. What we'd like to watch out for would be the updates coming in on the corporate advances and any sort of guidance in terms of its production volumes.
And Agam Vakil is joining me back to tell you he's going to have a very busy day. Of course, Tech Mahindra is the third Nifty company that he's tracking. Agam, what's the street pricing in?
Sure. So, well, there were a lot of concerns with respect to Tech Mahindra's growth overall, but this quarter is going to see a lot of large deal wins that the company has made over the previous quarters coming in on stream, and which is why we're expecting a strong growth for Tech Mahindra for this particular quarter. So sequentially, we're likely to see 6% growth. Again, EBITDA margin is likely to remain stable at around 12.5%, and net profit likely to rise around 7%. And these are all sequential numbers. So it certainly is going to be a very strong quarter for Tech Mahindra should it come out with these numbers. As I was suggesting, it's essentially the large deal wins in Q1 and Q2 which will fully show up on the books right now. There has been a little bit of an expenditure which will also go towards these deals, which is why we may not see as much margin expansion. Of course, there's a lot of cost efficiency features that the company is carrying out right now, which is why we are looking at a little bit of an expansion all the same. We are going to be keeping an eye on the pipeline as well as banking and financial along with manufacturing verticals, which may see weakness, but this quarter is going to be essentially about the communications vertical, which has scored the majority of the large deals.
All right, thanks so much for that, Agam. Now, on to some stories that you'll find on the website, BloombergQuint.com. If you were to take a look, of course, you'd find all you need to know, and you can read that at leisure as well. First up, India's slowing economy or economic growth over the past year could lead to a rise in defaults and slippages in the retail loan portfolio of banks, according to India Ratings and Research. The rating agency said in its bank credit outlook for the year starting April that the slowdown has led to slippages in loans to agriculture, retail and micro, small, medium enterprise segments. In another sign of the slowing economy and low consumer demand, inventory of luxury homes in India's top 7 cities has increased. The number of unsold luxury units priced above 1.5 crore rupees rose 10% year-on-year to 89,200 in 2019, according to a report by property consultant Anarok Properties. The stock is worth nearly 1.6 lakh crore rupees, which is about 34% of the total real estate inventory in the 7 cities. All right, that's all you need to know going into trade today. Do stay tuned. There's lots to talk about, and you'll find all of that right here on Bloomberg Quint.